Thank you, Mr. Toastmaster. So today I'm going to take you back to early 2020, the COVID-19 pandemic. And no, I promise that's not a prank, okay? So I just started working from home as a civil engineer. And after not too long of this, I got extremely bored because I was living by myself, no roommates or anything like that. So I started looking into what can I do with my time sitting here at home. I looked into different investment strategies, including the stock market. And first, I started dibbling and dabbling into stocks. The issue that I personally ran into with this is that I got very emotionally attached to specific stocks. And when they would go up and up and up, and then I'd get this thing called FOMO, fear of missing out, and I'd buy the stock. The second I buy the stock, then it starts to go down. And then I would have a fear of losing all my money, so I'd sell it and then it'd go up, and I'd continue on that feedback loop. So needless to say, this didn't last very long. This wasn't a sustainable method for me, and it was more trading than really investing. Also during the pandemic, I ended up purchasing my first property, a condo, because fortunately for me, I'm a veteran and got to use a VA loan, was able to purchase that with no money down and take advantage of those low interest rates at the time. About a year later, that property skyrocketed in value from $330,000 up to $420,000. And knowing me, I read one book on real estate investing and thought I knew something and said, hey, why don't I sell this property? I'm going to go buy a 4-unit somewhere, and I don't really care where, Orange County, LA County, and I'm going to house hack, meaning I'm going to live in one unit, rent out the others. And the problem that I ran into there is that I put in about 15 offers and I got outbid every single time, usually by institutional investors or international investors, things of that nature. So I took a break. And the best thing that happened during this break is I met my great friend Nate, still a really good friend of mine today. And he introduced me to an incredible group of thousands of investors nationwide. And they provide all the education you need to really know various strategies within real estate investing. So I did a test drive, tried it out for 7 days, and I said, all right, Nate, I'm in. What's the damage? $20,000, he says. And my jaw dropped. I said, holy man, $20,000. I thought about it some more, and I wanted to take this seriously. I saw so many testimonials and positive stories coming out of this group. Everybody was warm and welcoming, and the value of the education was there. So I took the leap. And after the fact, now today, just 2 years later, I own 7 rental units, and I'm currently under contract to purchase 5 more, which if that goes well, put me at a total of 12. And so why am I so into this idea of real estate? Why did I spend $20,000 to invest in this program? It all comes down to an acronym, IDEAL, where real estate is the ideal investment strategy. This acronym stands for income, depreciation, equity, appreciation, and leverage. Now, we all know about income. In the world of real estate, that means cash flow, meaning your money after all expenses that you can actually go out and spend. Depreciation is simply a tax benefit. For my friend Nate, that meant $56,000 extra dollars in his pocket his very first year owning a motel. Equity is simply when tenants are paying their rent every month, their most important bill, because everybody needs a roof over their heads, you're paying your mortgage down and your value in the property, your vested interest goes up. Appreciation, similar to stocks, however, you can also do a forced appreciation, which means if you put, say, $20,000 into a property, the value, if you do it right, could go up, say, $50,000, $60,000. Can't do that with stocks. And lastly, leverage. And this is my favorite part. This is using other people's money to go out there and invest and grow your portfolio, build your empire. Now, some people say to me, Chris, leverage sounds risky. Real estate sounds risky. I don't know about all this. I'm just going to keep my money where it is. And when they tell me that, I put myself in the banker's shoes. If I go into a bank and I say, hey, Mr. Banker, I'd like to buy $1 million property. I have $200,000 sitting here. I'll put 20% down. Will you lend me the rest? They'll absolutely entertain that. But if I go to the same banker, the same financial profile, everything else the same, and say, I want to buy $100,000 of Tesla stock and I'll put $20,000 down, will you lend me the rest? And if they say yes, they're probably pranking you. So otherwise, they're going to point to the door. Okay? And so to me, that says something very important about risk. If the bank isn't willing to lend on stocks, but they're willing to lend virtually anything as long as the property performs in real estate, to me, I'm putting my money with the real estate. So with that, I've shared a little bit about my story and how I got started in real estate. I've shared why I believe real estate is the ideal investment and how it's the only investment vehicle to give you all 5 of those ideal benefits. And I want to leave you with this. Because of these 5 benefits, I am well underway to quit my W-2, my day job, within the next 12 months. I will have time freedom, I will have financial freedom, and I will have job freedom. And that's 100% attributed to purely cash flow. That's the I, the income in ideal. But not only that, I won't be paying taxes on that cash flow because of depreciation. I'm going to continue to build equity and appreciation, which is building generational wealth, all because I invested in properties using leverage, all 5 of the ideal benefits. And so if you'd like to learn more about this incredible wealth building strategy, if you'd like that same financial freedom, job freedom, time freedom, be able to spend more time with your friends and family, be able to do the things you really want to enjoy in life, then let's stop wasting time, connect with me, and let's get started today. Thank you. And back to you, Mr. Toastmaster.